Hi guys, welcome to today's video, which as you can see there is based upon dollar cost averaging down and why it's incredibly risky. Now, before I get into this, please as always just pause the video and make sure you're comfortable with that before listening to me ramble on a little bit. So I think the first thing I've got to say here is that long-term investing is completely valid. If you're a long-term investor and you've come across this video, I'm not bashing investing. I understand that it's valid. I respect all styles of trading, investing. But what I want to do is just to present an alternative to you, to give you a little bit extra food for thought and maybe a solution to your problem if you continually find yourself trying to overcome mental hurdles with your long-term dollar cost averaging down strategy. Now, obviously Warren Buffett is a complete legend. This is not a bash on anybody. The facts are that Warren Buffett has not now beaten the S&P 500 for many years. Now, the way the market is, it's evolved. We can no longer buy blue chip stocks at 50 cents, a dollar. The way that Wall Street is now geared up, technology, algorithms, everything's changing. There is a very definite technical approach that I see out there. Market respects technical levels in the market. Now, again, I'm not trying to push you towards technical investing or technical trading, but it's something that I feel like you should consider, because I think what's lost on everybody is, especially with the long-term investing mindset, and I'm going to go over a few charts to back up what I'm saying in a second. With the long-term investing mindset, there's this preconceived notion that technical analysis is all fancy lines and it's all fancy looking charts that just look like crap. But what is being missed is that technical analysis is actually based upon price. Price is the number one technical indicator. And when we look at a chart like JCPenney, and this is the dollar cost averaging down strategy at play. Now, obviously JCPenney, you might counter this and say, well, it's a crap company, and I would completely accept that now. But back then we had a stock that was trading $80. Now, as this stock is declining, the dollar cost average down mindset is to buy, keep buying as it's going down. Now, the simple fact of it is that some stocks just don't make it back, and JCPenney is a perfect example of this. It has been absolutely crushed. If you've been dollar cost averaging on JCPenney, you've lost everything. Now, you might be saying to yourself again, well, it's all good and well presenting a chart for a stock that's in massive decline, but what about blue chip stocks? What about recognized healthy brands? Now, if we look at a stock like IBM, now, again, let's say you buy IBM at $180 and you keep dollar cost averaging down over a period, and this is dating back to 2016 here, over a period of 3 years, you are trying to overcome a lot of mental hurdles. Let's say you start off with 100 grand in IBM, and you've got 100 grand invested here. To watch that 100 grand drop to 30 grand or 40, 50 grand, whatever it is, that's a huge deal. And that's the problem that you have with the dollar cost averaging down mindset, is you have to deal with large drawdowns. And like I showed you before, sometimes stocks don't make it back. Now, IBM at the moment, is starting to recover. So, maybe those of you out there that are in IBM, or you are dollar cost averaging, sometimes it will work out, but sometimes it doesn't. So I think what you need to do is maybe look at other strategies out there that perhaps don't present you with the mental anguish and so forth. And I think if you can find a strategy that I suppose absolutely aligns with your goals, It just reduces the complete stress that you're under. And the chart that I'm about to present to you is a strategy that has stood the test of time. It's a trend following strategy. And the concept is, rather than dollar cost average down, which is also known as adding to a losing position, why not add to a winning position? So let's say you buy a stock, like Okta, you get in at $35, the stock starts to move in your favor. Great. There's not any mental hurdles to overcome. So then you decide, okay, rather than dollar cost average down, let's try dollar cost averaging up. Let's keep adding to a winning position. So you buy in, and as the trend develops, you keep buying in. You are compounding your position. And when you do that to a winning position, over time, you will accumulate incredible wealth. Now, if this is the first time that you've maybe come across this strategy, if it's the first time that you have been shown perhaps an alternative to your dollar cost down strategy, I would urge you to look into trend following. Like I said, it stood the test of time. The best traders on the planet incorporate trend following across their portfolios, and it's so stress-free. I cannot emphasize that enough. It is so much easier when you buy into a stock and it immediately moves to profit. And it's the study of price. There's this preconceived notion that within investing circles that technical analysis is based upon fancy looking charts where we have to have lines everywhere, when actual fact the study of technical analysis is based upon price. Price is the number one technical indicator. You don't need lots of fancy lines, and this approach would also have its roots, I suppose, in active investing, where you're just managing your portfolio on a daily or weekly basis. You could spend 20 minutes a week with this strategy where you're just adding to a winning position. Over time, it compounds. Now, eventually, if you're managing your trade correctly, you will be stopped out your position, but you will be stopped out at a massive profit. Once you're stopped out, reallocate your risk elsewhere, and you've constantly got your money working for you. You're not having to deal with massive drawdowns. You're just adding to a winning position, because I think when you go down the route of dollar cost averaging down, the wheels could absolutely come off the roller coaster. I do very much view it as gambling at Vegas. And again, a lot of you out there will be preaching the words of Warren Buffett, and you'll be in denial about a lot of things. But I've just presented to you an alternative. It's absolutely valid. Choose to do with that information what you will. But if you did enjoy the video, please do subscribe to our YouTube channel. Give it a thumbs up. Let me know what your thoughts are. If you feel like I've got it completely wrong, let me know. Comment below, and I will reply to you and give you my views. But if you are somebody that perhaps struggles with your trading, active investing, feel free to go and check out our website, honeystocks.com. We'd love to hear from you. But if you've stuck around to the end, thank you very much for watching, and hope to see you in the next video.